Hi everyone, welcome to this week's edition of the Swyftx Squawk. I'm Pav, lead market analyst here at Swyftx, and we're going to take a little bit of a different take this week on the markets. We're going to step away from performance and what's moving in the market specifically and dive a little bit more into the fundamentals, because we just had a landmark moment for the industry land overnight. We're talking the Clarity Act, and this is something you might be seeing all across social media, news outlets. And if you haven't really digged into it to learn, well, what's it all about, who's it going to impact, and what's the roadmap look like ahead, that's what this episode is here to do. It's here to clear all that up, put it in a nice little neat package, and explain to everyone why this is such a big deal for the industry. Now, I just want to start off with the very simple fact that crypto as a whole, it's been operating as very much in a gray space this whole time. If you've been in the space for long enough, you've probably seen regulators like the Securities and Exchanges Commission in the US, or the SEC, take its very harsh approach in the last round of leadership that we saw, very much sanctioning against a lot of crypto projects, asking exchanges to cease and desist offering certain products, to now what we've seen most recently, a very supportive sort of framework, very much an agenda item to get crypto into the main light and get it regulated and basically give the industry a rule book to work by. Because that's what's missing right now, right? There is no clear rule book. It affects everyone from people that are developers, people trying to start innovative projects, exchanges trying to allow people to access these projects, and then the consumers themselves, right? So it's a whole spectrum of people who will see, it's all in the name, some clarity by the end of this whole ordeal. Now, what we did see most recently overnight was the most recent update in this particular news saga, the US Senate committee advancing the crypto bill. This is, again, like that next positive step forward. As we have seen a little bit of debating in more recent times on how this bill should form and what sort of structure it should provide, as there were some key concerns from people like the big banks over in the US that offering yields on things like stablecoins might be starting to eat on their lunch, and they weren't too happy about that. That was something that was made quite public in the media a couple of weeks ago, but it just goes to show that everyone's viewing this as, yes, maybe a technological innovation, but there's still concerns over existing products and existing companies and how regulating this whole space may impact them. And that's what this act basically was, right? You had a lobbyist from the industry trying to advocate for a clearer rule book, but then you had the current people in market that are offering similar style products concerned that they would basically be harmed by these laws coming into action. And that's what's caused quite a bit of friction around that January period this year. But overnight, we have seen, again, like I mentioned, that Senate committee pass the bill. We have seen crypto prices move higher in the last 24 hours at this time of recording. Bitcoin up 2.5% almost, XRP up 4%, and even the likes of Hyperliquid is now sitting up 21% at this time of recording as well. That one in particular also had a spot ETF launch in the US as well this week, so that could be also adding a little bit of volatility there in that market too. The Clarity Bill itself, it's in its simplest term just to provide a rule book. This isn't going to take away from the volatility. If you call back to last year or back to 2024, we had already seen some pretty big moves in the institutional space around the assets like Bitcoin and Ethereum with their spot ETFs going live. But this is still different, right? This is, again, a complete clear rule book for everyone. And we'll have it in our write-up below some more advanced details on the particular elements of people that were impacted and how. But just to call out a few key ones that were on my radar, crypto projects, the new regulation will set out a more clear pathway for innovators to get funding for their projects, as well as provide more clarity on how projects that are funded and have seed investors need to provide adequate disclosures to avoid pump and dumps in the market, because that has been a key call out. Things like NFTs continue as they were. They're exempt for any security laws, basically seen as more as a collectible or digital art piece. And stablecoin businesses, there's still some contentious elements here. The whole idea of providing yield similar to the way that a bank does. So I think we'll still see a little bit more still to play out in that space. DeFi was another big call out as well, with protocols getting much more protection, as well as having to now come to the table, and likely they'll have to do some sort of KYC or know your customer practices just to basically restrict their product offerings in countries that they shouldn't be offering them in. So you can see that from a top to bottom perspective. It is just looking to provide, again, those rules for how different players in the market essentially can operate freely without having to worry about someone tapping them on the shoulder. Now, again, we're not going to dive into every single bit of detail on this particular bill, but hopefully we've given you enough of an outline of what's it all about, what the road to regulation's been like so far. And if we talk about what's ahead, we're still waiting for now the bill to move to the Senate. Now that Senate will need to be supportive of the whole agenda as well. And then from there, we'll see it go to the House, and then from the House to the President for signature. There's still quite a bit left on the roadmap, but it is, again, just another big tick. What's your thoughts? Be keen to hear. But that's it all from me here today at Swyftx. Catch you next time. Thanks.